You might be asking yourself right now, Trey, why you sound like dog shit? I am sick right now. I got a little something, right? I take Humira, and I think this has something to do with my auto immune system. It can kind of lower things, and I get sick a little more frequently, but I'm feeling okay. So just deal with that. Everything's chill. We've got a pretty interesting market right now, right? Bear market, uncertain market at best. I'd say bear market at worst. And if you're an active trader, it can be kind of hard to kind of tread the water right now, especially if you look back into 2021, especially that January to March timeframe when things were really smooth. It was butter. You could buy any stock, throw a freaking dart at a board of stocks, and you make money. Well, things are a little more challenging right now, and I want to share with you guys what I find to be a helpful strategy for options trading if you're interested in that. If you're just a buy and hold sort of person, right? You're an investor. You don't have any interest at all in trading on the side. That's cool. Click off the video. This ain't for you. But I found something that works for me. I want to share that with you. You can make with that information what you will. As always, I'm not a financial advisor, not financial advice. Do what you got to do at the end of the day. So, ask yourself this question. What is the most difficult thing to deal with during a choppy market, an uncertain market, or a bear market? It's a lack of trend continuation for a long position. It can be very difficult to find the plays that are continuing on some sort of bull run, especially small caps and mid cap stocks. So a way that you can sort of negate that is by finding the diamonds in the rough, right? Dig through for hours and hours and hours and find the best stocks. Or you can sit cash heavy at the end of the day with your trading positions. I used to love swing trading. There was a market for that back between January and March, April, right? Now it's a little more difficult. It's a more difficult market to be able to tread that through. And you can very happily look through unusual whales and all the option scanners for hours and hours and hours if you'd like. But I've found that the better way to go about this is to take daily setups. So I want to share that with you. I want to share my thoughts in terms of how you can avoid these overnight positions, how you can make money consistently, because this does work for me. And I'm going to show you that here really quick before I even get into the philosophy and the trading perspective that I'd like to share. So here I have a screenshot of December 31st. This is a day in which I took 7 different trades. One of these I'd consider to be an L because I didn't actually stick to my strategy, right? And that's this upstart trade. I actually held this for about an hour. And what I'm going to share with you guys, this would break my rule, right? I wouldn't want to typically do that, even if it does mean that it was a win. That was a break of my rule. But nonetheless, AMD, Affirm, NVIDIA, DocuSign, Lucid, Upstart, and SPY, these were all pretty well executed. I was very happy with the way that I took those trades, and that is the way that I am going to be pitching these to you today. So 3 things I want to share with you in terms of psychology perspective for this trading strategy, right? This is my perspective. This is something that I found works for me, especially working a full-time job. From 6 in the morning until typically about 4 at night, I'm working full-time for the Army, right? So I want to find things that make it easy for me to not have to watch my position like a hawk. And one of those is to find 105% trades rather than hunt for hours and hours and hours for that single 500% trade. Now, it doesn't mean that you have to trade 100 times in a single day. Maybe that means in a month. Maybe that means in a week. Maybe that means in a day for some, right? But at the end of the day, I do think it's easier to find those 105% trades than to hunt for hours, because time is valuable and I'd much rather have that time not tied up, right? So that's one thing. The next kind of ties in with the last point, and that's to look at trades as statistics and not with emotion. Now, what do I mean by that, right? Well, if you were to shoot, if you were to step up to plate, right, you were to bat 100 times, people like to pay attention to batting average. How likely is the player to hit the ball and to get on base, right? Some people have 80 out of 100 hits for a win, maybe 85, maybe 90, maybe 95, maybe 70, maybe 50, who knows, right? But at the end of the day, it's a statistic, and data has power. So if you know that on average you can hit, let's say 80 out of 100 trades as a win, you want to find every single opportunity to move on to the next trade, especially if you're losing. So what that means, very simply put, is my last point. Winners pay per hand and losers hold. And that is specifically talking about trading. That is much different than investing, right? Holding core positions for when the undervalued price meets an overvalued price and you make profit on that, right? That's a much different situation. You want to hold those sort of stocks. With trading, on the other hand, you really want to stay on top of moving your money into the next overall trade. Sometimes that means you have to leave your greed on the wayside, and you have to, sometimes that means that you leave room off the top, right? So you're not going to get the top of every single trade. Sometimes that means that you close a red trade and it could have turned green. That's okay, because at the end of the day, you want to pay attention to your batting average. How likely are you to win a trade out of every 100 trades? If it's 80 and you're one of those 20 red trades, you want to move on to that statistically probable next green trade. Which brings me to the actual perspective, right? What do I do? What do I find value in? How do I make money trading in a bear market or an uncertain market? It's very simple. I play 1 minute candles with very basic TA patterns: head and shoulders, inverse head and shoulders, cup and handle, inverse cup and handle, flat top breakouts, flat top rejections, supply zones, demand zones, just the basic stuff that you learn at the beginning of TA 101, right? And I apply those to a 1 minute time frame. And I take very small gains and I stack them over and over and over and over and over and over, right? That comes back to number one. It's easier to find 105% trades than it is to find a single 500% trade. So I take entry on confirmation of bull or bear trend, because you can play long calls or long puts with this strategy, right? And you exit either on the first closed red candle, if you want to be very, very conservative, or with a break of that trend, with the bull trend or the bear trend, and you leave absolutely no exception, right? Now you might be asking yourself, Trey, what about a stop loss? Well, I'm not here to tell you what your stop loss should be, but I keep mine very tight. I try to keep it between 5% to 10%, and I usually cut it closer to that 5% because I do kind of edge close to that 100 trades in a day at some moments in time. So I'm going to show you what I'm talking about, right? Let me go back in time here. I'm going to show you Tesla, and I'm going to show you the SPY. I'd like to show you Lucid and a couple others. We'll start off here with Lucid, right? So here's a very basic TA pattern. You're connecting dots. Trend lines 101, right? This is one of the very first things that you learn when you when you study technical analysis. Connect dots, 1, 2, 3 touch points. You can see a breakout from that overall trend line. And what I personally do is I take that first red candle off the breakout as my exit. So I enter here, right on this green candle. I take these 2 minute candles and I see this first red candle close, and I'd exit. Now, it doesn't look like a lot, right? 39.50 all the way up to, if you were to take it at the bottom here at 39.80, that's only a 30-cent move, right? But that's 5 to 10% gain. And you can move on to the next small scale breakout and do it again. This is a surefire way that you're not very sexily, but you are consistently profiting. Now, this is actually a pretty cool statistic, right? 8-10% gains back to back to back to back to back on your portfolio will double your account. 12 of them will triple it. Nickels and dimes add up over time. You could have done this again with Lucid right here, right? This is another crucial point. Typically, when you see a previous level of resistance, this is what this descending level is right here, continue to act as support after a breakout, you look for that, right? A bounce off of that would have actually been a bullish confirmation. You would actually be able to take that as a call position for trend continuation on that specific spot. And if you're looking for TA walkthroughs, TA 101. This isn't the video. This is more of a sort of a trading philosophy and how I personally trade in a bear or in a choppy market. You know, that is what it is. But nonetheless, you didn't get that bullish continuation. Instead, you got to break down underneath that trend line. You can take an entry on the close of that candle below that overall trend line and ride it next down, right? 1, 2, 3, 4, 5, 6 candles in a row. You can take an exit right here on this green candle if you're being very conservative, or you can ride it down to here where you get the reversing candlestick pattern, the engulfing, right? You get an engulfing green candle down here. You'll be able to ride this for 10 minutes. You take your profits and you move on with your day. Very simple TA pattern. Could it have gone lower? Yes. Could it have gone higher? Yes, right? At the end of the day, it doesn't matter. You're not worried about the idea of I could make more money or this could turn back green. We're not thinking about it in terms of greed and fear. We're thinking about it in terms of statistics, in terms of data, in terms of if I know my batting average, how can I get to the next trade so I have a good chance of making money? Lucid again, right? Now you have another trend line right here. So every time it touches this trend line, you can see that it bounces back up with some obvious caveats, right? Sometimes you get false breakdowns underneath. Sometimes you do not. But nonetheless, 1, 2, 3 different touch points right here. Off this third bounce of the trend line, you could take a call entry, and that would end up being at about $39.40. 1, 2, 3, 4, 5, 6, 7, 8, 9. First closed red candle, you take your exit, and that's a pretty decent little swing right there, right? 39.40 all the way up to 40.20. Now, it doesn't sound like a lot. Maybe that's a 15% trade, maybe 20. It's not sexy. It's not something you want to screenshot and put on your Twitter or your Snapchat or your Instagram or whatever. It's not crazy gain porn, but it's consistent, and it'll consistently make you money. And this is the shit that they will not tell you on Twitter, is there are people out there, right, who do consistently make 400% trades on a day-to-day basis, but they sit down at their computer all day to find those trades. And that's a very slim minority of people that actually are able to do that. And if you want to do that, feel free. It's way sexier, right? But I found that this works for me, and I don't have to sweat on a day-to-day basis on what a chart's doing. You can rinse and repeat this the entire day, right? Bounce off this trend line, small gain, right? Some will be neutral, some will be losers, but you get the idea, right? Bounce off the trend line right here. 2 minutes worth of candles, you make 15 cents on that contract, 5%. You do it again here, right? Entry at 41.77, first red candle close, you get out at 42.13. The point being, you're applying very basic concepts that everybody understands, right? You understand head and shoulders patterns. You understand how candles work. You understand flat top breakouts, flat top rejections. You understand trend lines, all that sort of stuff, right? You apply basic options knowledge, playing at the money or barely out the money calls or puts, right? In a short-term expiration if you're going to be day trading them. And you take profit on the table with absolutely no exception for any sort of gain or any sort of loss on that trade. And you consistently do it over and over and over and over and over again. Now, why do I think this is a good strategy to have in a bearish or an uncertain choppy market, volatile market, is because it's very hard to find trend continuation. I absolutely do not overnight trades right now in terms of Lucid, Roblox, the SPY, blah, blah, blah. You go down the list in terms of things that I'm looking at. I'm not doing it because there's so many uncertainties with COVID, with the economy, with inflation, with the Fed, with geopolitical situations, with economic situations. There's a lot of different things that are changing on a day-to-day basis. And you can avoid that by controlling the controllables. You can play this with anything, right? SPY. We go back here to yesterday. You can see that basically any time that it touched this trend line, it would bounce back down. You got one test, two tests, three tests right here. You could take an entry off of this breakdown off of that trend line. Bam. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes worth of candles. First green candle, you got an engulfing candlestick pattern. You take your exit. And on the SPY, they have the 0 DTE or days till expiration contracts that you can play. And you just made yourself a hot penny off of a 10-minute move. Now, obviously, that's a hand-picked example. That's a very solid example. Sometimes they're going to be choppier than this. Sometimes you're going to have to just ride 2 or 3 minutes worth of price action. And you do it again, right? Just like I showed you back here with Lucid. You take this breakout right here, it's only 2 minutes, right? It's not a sexy win. It's a 5% win. But sometimes out of those 100 swings you take at the bat, they'll have 1 or 2, 3, 4, maybe 5 of them, right? They're really solid hits. Second base, third base. That'll get you a 20, 30, 40% gain. And that's what you can look forward to. Is statistically speaking, if you show up to bat 100 times, a couple of those are going to be good hits. You don't have to hope for them, right? Because data and statistics can prove that for you. So just keep showing up to the bat. If there's anything I can give you as a final point, right, I'll leave you off with this, get you on your way. It's you do not want to force a trade in a bearish or an uncertain market, right? Look at it as a data point. Out of 100 swings, how many of these are going to be good hits? How many of these are going to be bad hits? And how many are going to be home runs? You take that data and you can look forward to that because more often than not, data proves king. And you can look at your own batting average. You can try to improve it. You can try and find ways to be more disciplined, to be more this, to be more that. But at the end of the day, once you cut out the emotions and you look at it as data, right? You take these super small wins. This is what I do, right? Super small wins, and you stack them over and over and over and over and over throughout the day. Don't even give yourself a chance to go red. It's the worst thing you can do. Let a green trade turn red, right? That's the game changer. That's the game changer in a bearish or uncertain market, is taking what's on the table until the bulls start ramping up again. You see the mid caps, small caps, right? They start getting more aggressive. You want to take some of those penny stock positions, this, that, right? You can do what you want to do, but now's not the time for that. Now's the time to take the small bats, right? Take the small bats, and occasionally you'll find a pretty good swing. And that's what I've got for this video. So catch you on the next one. Appreciate everybody. Much love, light taps. Peace.